question I get a lot as a mortgage loan advisor is, how do you buy your next property when you own a home already? Now, one thing a lot of people have been talking about, you've heard in the news cycles, is this concept of golden handcuffs. And that was, hey, rates during the pandemic were really low. Everybody has a low rate. They don't necessarily want to give that up for the next home because rates have been higher. But as time's gone on, the market's normalized a bit and people are realizing, hey, this is kind of what the market looks like. If we need that home that's in the area we want to be, or that has the right number of bedrooms or sometimes bathrooms, it's going to mean taking on possibly a different mortgage rate, leveraging the equity that you've got in the property you've been owning and buying the next one. But sometimes it's complicated when you're trying to buy your next home when you own one. The standard process is called doing a contingent offer. That means you're buying a home that is contingent, means it's based on the home that you're selling. Pretty normal. But a lot of times that can be problematic because a seller, they want what we call the fastest path to their cash. They don't want to know that you as a buyer are depending on somebody else coming and buying your property. So if you're in a situation perhaps where there's another offer, they're going to overlook yours. So how do you be competitive as a buyer who's got a home to sell? How do you make it all happen? How do you try and afford 2 mortgage payments? The solution is often called buy before you sell, or bridge financing is sometimes the common term. It comes in a couple different formats, and there's lots of options that are out there. They're not always a perfect fit for every buyer, and I like to let people know that, hey, sometimes a contingent offer, a contingent path to selling your home is the best path. Sometimes a contingent offer or path is the best path, but there are tools that we can use if you don't want to just go straight contingent on it, okay? Or potentially lose out on the home that you're buying. One thing that can happen that people don't always know is that if you have a contingent offer accepted on a property that you're excited about, but your home hasn't sold, and another buyer comes along, at least in the state of Washington where I operate, you can get what's called a bump notice. And so now the dream home that you're excited about, you've just got a notice on that somebody else is going to buy it, and you have a certain amount of days, 5, 7, 10 days to get your home sold, or you get bumped. Means bye-bye dream home. Insert bridge financing. What's really cool is there are lots of opportunities, especially if you have equity in your home. But how do you grab that equity? How do you actually leverage it? You can't get equity. Equity's made up until you sell or you borrow against it, right? So enter bridge financing. And that is an opportunity where we either use the equity in the home that you own currently and use that to purchase the next home. You can also use what's called a guaranteed backup contract. And there are several companies that will do this for you where they say, hey, look, we will write you a contract that says we're going to buy this home from you, give you 6 months to sell it. In the lending world, we get to look at that as your home being sold. Now we've got the equity, we've got your home technically sold, so it doesn't impede your ability to qualify for the next home. And then we can take the funds, purchase the next home. You move your family. You don't have to get bumped out of your house while you're in the middle of dinner because somebody wants to see it. You don't have to do the dishes and clean the home every time you're going to have an open house. You can move to the next home. You can sell the next home. You can buy before you sell. Sellers love it too because now they don't have to worry about the contingency in the offer. Option 1. Another option is what's called cross-collateralization. And if that makes your eyes go cross-eyed, it's probably true. But that is, we're taking both homes and we're collateralizing them together. So one loan, 2 properties. You can move into the next one if there's sufficient equity. So there's enough value in your home. We can look at that. We can look at the purchase of the next one. You can do it all together in one loan and then turn around and sell your property once you've moved in and pay off the loan and refinance into the next one. A little bit more of a complicated process. And if those are all words you didn't understand, that's fine. Think of it as, hey, you can buy the home before you sell if you have enough equity, and there's some creative tools to do it. But at the end of the day, there's a cost associated with it. And that cost may not be worth it to you in your specific situation. And I like to tell people too, hey, if a contingent offer is the right path for you, it's okay. You have to understand that maybe it'll be a little bit more challenging, but understanding your options, moving into the process informed is going to be the most important part of it. That's what we do. That's what I'm passionate about. So if you do have questions, if you're a home buyer, or you're a homeowner and you're like, we want to buy the next home, we don't know how, that's why we're here. Leave your questions in the comments, reach out. happy to walk you through your specific situation. And happy house hunting.